Mr. Stephen Dow. Last week we talked about a couple of flips I was doing. I happened to be doing
Yes.
them with cash, which was a
Yes.
horrible use of cash. Once you highlighted to me, I could have used much better leverage.
Yes.
Before we dive into this, though, let's do the marketing spiel so we both don't get in trouble.
Yes. Again, although it works very happily for Velocity Mortgage Capital, all the ideas and topics discussed on this channel that of my own. So let's get it going again.
Yeah, so let's remind people of kind of the setup if they didn't watch last week. If you want to go back and watch last week, you can go look at a playlist called Non-QM Stephen Dow. It's there.
Yes.
I shared with you what I'm doing in my current portfolio. I bought a couple of flips. One is already sold and gone. The other one's at escrow to sell. They'll end up fine. I'll make a bunch of money. Okay. But then you
Right.
and I got to talking about how I could have used it because I put $500,000 to work, like
I
cash,
know. Well,
500 grand.
you're kind
And
of flexing
yeah,
a little bit.
yeah, a little bit, a little bit, a little bit. A little bit. But
I mean, people
come
use that
on.
to borrow that money. You're like, oh, I had to put 500,000 down. Oh man.
No, oh
Anyway,
darn. But the problem was I was done. I was capped out. I had more cash, but I would not use more, right? I'm a
right,
ridiculously conservative investor. And
right.
you so casually were like, Michael, why didn't we do this? You could have put 100 grand to work
Right.
and been able to do 5 or 6 more deals, you idiot. I'm like, you're right. I should have called you. We should have got the deal done. So I want to
Right.
remind people what we could have done.
Right. So again, I think the topic didn't come up because I figured, at the time, there was some certain talk because where the market was at, maybe BRRRRs weren't as, feasible given certain, metrics
Yeah.
and just environments that we're in. Anyway, but if you find the right property in the right, situation, it still could work. So what we had discussed basically was the fact that we would still allow that 90% CLTV, a feature and you can apply it to the ARV loan. So now for a season flipper, we would cover 80% of the purchase price. We would allow for the seller in this case to carry a 10% second temporarily while you're doing the rehab, and then you just have to come in with 10% down.
And you cover recover
Correct.
most, if not all, the repairs.
Correct. Right. Oh, there's other little features where, yeah, the majority of the costs can be paid on the exit, not on the acquisition. So it allows you more, payment relief or cost effectiveness walking into it, and then use my money to rehab it, increase the value, and then pull the cost out of that increased, value, and not have to come out of pocket. So there's a couple of different moves that you could have, applied given the circumstances. But again, we just never had a chance to talk about it.
We'll just put some rough numbers down just so people can
Sure.
understand. So I bought it. Let's just say I bought a fixer upper for 175 grand, and ARV is 300.
Mm-hmm.
Again, let's be very clear. This only works with great deals. These are not
Right.
skinny deals. These are fat
Right.
deals. I've done over 50 flips. I'm not a newbie. I have a
Right.
team. People can go
Right.
walk the walkthrough. They can see the stuff I build. I share
Mhm.
everything on this channel.
Mhm.
So again, buy it for 175. We're going to remove closing costs and all that other nonsense just
Right.
for this conversation. So
Sure.
in theory, I could have got an 80% loan from you. Worst case, I would have had to put 20% down, but I could have got the seller to take a 10% second. I could have had that discussion pretty easily. So I could have got into the deal for 10%. Worst case, 20. Then again, I know my numbers. I have proven track record. I budgeted 50 grand for the repair. It came in slightly less, 48 and change. Call it 50. I could have gotten that. I would have gotten it back in draws, right? Probably 3 different chunks, I'm guessing.
Right.
So again, I pay for the first third. Steven gives me my money back. I pay for the next third. Steven gives my money back. I pay for the next third. I get my money. How do I get my money back? Right. I'm whole, right? Pictures, video, receipts. It's a relatively easy process.
Yep.
Then I sell the property.
Uh-huh.
And I move on to the next one. So again,
correct.
First
or even a buy and
sold.
hold situation, at least with our products.
Refi the money,
Well, here's the thing. We don't normally have the 12-month seasoning, on the conventional side to pull money out. Right. If you actually did the rehab, and if there's enough sales comps to support the higher ARV or after rehab value at the time of completion, whether it be in a month or 2 months after acquisition, we're fine with that. And so then now your money's not tied in, as long. Obviously, the rate environment's a little bit different to where
Sure.
that might not be as feasible for now a buy and hold situation, but it just depends on the loan amount and things of that nature. But the concept definitely worked. I've done it for multiple one rent all the time, family members. And so, yeah, I mean, Christy M in particular, her and her husband bought a house all cash. He did the work, renovated it. A month and a half later, we did the refinance, pulled the money out, got all their cash money, as far as the purchase, the rehab money, and cash out money to apply to a multifamily next. So they were really happy at that point. So that concept, yeah, the BRRRR actually really worked in that instance.
Yeah. So again, there's a couple of takeaways from all of this. Some of you out there watching this have a bunch of cash, and as you saw in my example, sometimes that, I don't know, allows you to get lazy or cut corners.
Right.
I don't know how else to say it. I could have used the cash more effectively. It's going to end up working out, but if I was really going after it, I could have gotten more deals done. And how I structured these two deals, I was done. So I really, I didn't bother pressing. Right. So it's just always a lesson. Even after 20 years, you still make mistakes. So it's okay.
Well, I don't know about mistakes so much as this. I mean, maybe
it was. Think about the opportunity cost. So again, the deal will work out. I'll be fine. Nobody should.
I was just gonna say, saying it's like, oh, you're only gonna make 30,000 instead of 60 or something like that.
So don't cry for me. But again, there's an opportunity cost. There is an opportunity cost. I
agree.
I could have done easily 4 or 5 more deals if I had put it in place from the first deal. So again, when you're getting into this business, it works to have a professional. You don't have to use Stephen Dow, but you should at least call him and see what he can offer, whether it be blanket portfolios, 90% LTV, fix and flip loans. Again, please understand me and hear me. This only works with great deals. 175 purchase, 50K repair, 300 exit, done it twice. So deals are out there, but you have to do the work. Stephen, any kind of closing thoughts or reminders on how people can get a hold of you?
Well, other than, again, it's always good to have plan B in place because you just never know, especially in this kind of, rate environment, like you're saying, quantitative tightening with certain lenders just because of the whole banking, situations that's going on. So leverage, or I should say, financing is going to get a little tougher, especially, in certain markets. We just don't know how this is all going to play out. But again, it's always good to have just somebody as an alternative, just in case if things, don't pan out how you planned it. So other than that, yeah, easily just email me, SDAO@Velocity Mortgage Capital. Excuse me, SDAO@VelocityMortgage.com. In the subject line, just put the acronym ORAAT, which stands for one rent at a time to get past the firewall. Body the email, brief description, maybe what you're looking for. Property address would be helpful, mid-FICO score, and then best phone number to reach you at, and I'll be in touch. Otherwise, yeah, we're still in business, not going anywhere. Strong balance sheet, publicly traded, all the good stuff.
Yeah, what I would tell investors out there is the environment we're going to is going to be challenging and interesting. There will be some amazing deals and true wealth built, but you got to be working with a professional that you trust and respect that can help you understand what is the best option for you. And again, Stephen Dow has done multiple deals for me. Again, got me 30-year money on apartments, which I did not believe was possible. And I should have used for my fix and flip deal, but well, live and learn. Stephen, thank you very much. Have a wonderful week. We'll talk again next Thursday.
Thanks, Mike. Appreciate you. Have a good weekend.